Will the Mueller report roil the stock market? Hey race what it would. Breaking news. Investors have largely ignored the political drama that has accompanied the first 2 years of the Trump administration, but equity strategists and analysts say markets may soon have to deal with its ramifications, as special counsel Robert Mueller reportedly nears the end of his investigation into possible ties between the Trump campaign and Russian meddling in the 2016 election. President Trump added to speculation over Mueller's yet-to-be-submitted final report on the inquiry, when the report could be a major and immediate driver of stock market volatility, strategists said, if its conclusions starkly incriminate the president. Trump has repeated more downside than upside. There's more downside risk than upside, from the report's release, Stephen Pavlik, Washington policy analyst at Renaissance Macro Research, told MarketWatch in an interview. That's because most people have priced in that there isn't a lot of there, he added, arguing that if there really were damning information, proving the president coordinated with the Russian government's efforts to boost his election chances, that it likely would have come out already, given the media's intense focus on the issue. But if the report does include information so damning that it leads to erosion of support for Trump among the Republican Party's base, the market reaction would be bad, he said, because it would create a great deal of uncertainty, put the administration's tax and regulatory agenda at risk, and potentially encourage the president to adopt policies unfriendly to the market in an attempt to distract the public from the report's contents. Related video. I don't mind if public sees report, Trump says, provided by CNBC. It's conceivable that Trump could raise tariffs on China or impose auto tariffs on the EU just to change the conversation, Pavlik said. Outside of its combative stance on trade issues, the Trump administration's policies, including the recent corporate tax cut and efforts to pare back federal regulations, have largely been seen as supportive of equity markets. The S&P, John Normand, head of cross-asset fundamental strategy at J.P. Morgan, conclusions from the Mueller report so incriminating that the House initiates impeachment proceedings would lead to higher volatility, he argued, though he placed the probability of such a scenario as low to moderate. He recommends that House Speaker Nancy Pelosi, D. California, said earlier this month that while she doesn't think Trump is fit for office, unless there's something so compelling and overwhelming and bipartisan. Watching the Senate. Brad McMillan, Chief Investment Officer at Commonwealth Financial Network, agreed that an incriminating report could be a source of short-term volatility, but he argued that the immediate impact of the report wouldn't put the administration's business-friendly policies at risk. I am not watching the report, I am watching the Senate, he said, arguing that evidence of any criminal activity on the part of the president would only be material to markets if it leads to 20 or more Republican senators favoring the president's removal from office, a remote possibility given his strong support among the GOP base. Republicans hold a president is impeached if a majority in the House of Representatives approves one or more articles of impeachment. Next, even if Trump were removed from office, however, that would result in Vice President Mike Pence taking over. There won't be a lot of 2020 vision. The lasting effect of the report, therefore, may not materialize until closer to the 2020 elections, when the Democratic Party has a good chance of taking both houses of Congress as well as the White House, especially if revelations from the report reduce the chances of the president getting re-elected, he said. Unified Democratic government could spook markets, McMillan said, but it's too early to tell what the policy agenda would look like. There is an already crowded field competing for the Democratic Party's nomination for president, and the process has been notable for the number of bold economic policies proposed by candidates like Senators Elizabeth Warren and Bernie Sanders, including new or, that observers say could hurt stock valuations. Whether this willingness to propose such left-leaning policies captures the imagination of Democratic Party primary voters remains to be seen. There are a lot of
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.